Hey everyone, welcome back to Corporate Decoded. Today we're diving into a 10Q report, and trust me, this one has more twist than a pretzel. Are they doing good or bad? Let's find out. We're checking out Northern Technologies International Corporation, or NTIC. This report covers their financial performance for the quarter that ended in February of 2025. NTIC specializes in corrosion prevention, mainly under the brand Zerust, and also deals in biodegradable plastics with their Naturotech brand. First, let's take a look at the numbers. Their total assets are about $93.7 million. Not bad, but it's actually less than the almost I had back in August of 2024. So they have slightly less assets than a few months ago. Now, looking at their receivables, the money owed to them, we see $15.4 million. This is down from $19.20 million in August. Fewer sales means less money coming in, which impacts the bottom line, so keep an eye on that. Moving to the income statement, their net sales were $19.1 million, which is less than the $20.8 million on the cost of goods sold, which is the expenses directly tied to the items that are produced, leaving them with a gross profit of roughly $6.8 million. They earn income from their investments in joint ventures, which contributed a good 620, 70, 30, 700, and that's over $1 million. However, when we look at operating expenses, the costs to keep the business running, those add up quickly. Selling, administrative, and research costs take a big bite to over $8.8 million. That's why, after all the math, they actually have an operating loss of about $333,000. The numbers aren't looking good, so let's continue digging. They did manage to get some interest income, which helps, and they had some other income to the tune of $1.1 million. This all leads to an income before taxes of about $872,727 Of that, only about $434,000 can be chalked up to NTIC, resulting in about $0.05 earnings per share. Not exactly numbers to brag about, considering that during the same period last year it was $0.118. Digging into other things they lost, their comprehensive income, which shows the overall change in equity, is down $32,879. A big part of this is due to foreign currency translations, which cost them $635,506. In equity section, we see that stockholders were paid, and this cost $659,934. Also, there's stock option expense. Checking their cash flows, we see that they got $20,000 from selling some equipment, but spent more than $700,000 on purchases. They did make some money by paying for shares in the company, and they borrowed to $1,063,000 on 56 on their line of credit. Now, the legal fine print. The company says that the numbers reported are a fair reflection of their position and results. Also, it's important to remember that past results aren't a guarantee of future performance, so don't take these numbers as a prediction of what's to come. For the financial reporting nerds, there haven't been any new major accounting policy changes. However, the Financial Accounting Standards Board has issued some updates coming down the line. These changes cover things like segment reporting and income tax disclosures. NTIC is still figuring out how these changes will impact their reporting, but these updates will affect companies with how they will classify their income and expenses in the future. They split up their inventory into production materials and finished goods. It's a fairly balanced split, with $6.6 million in materials and about $8.4 million in finished products. In terms of property and equipment, they have land, buildings, machinery, and some assets still in the works. After you subtract depreciation, the net value comes out to about $14.8 million. Their intangible assets, which aren't physical but still valuable, include patents, software, and customer relationships. These are worth $87 million. NTIC has investments in different joint ventures, which are partnerships with other companies. Their share of these ventures' equity is around $25 million. NTIC has debt, they have a credit agreement, and they've also taken out some term loans through their subsidiary in China. As of February, they owe $5.3 million on their line of credit and almost $2 Miro dollars on the term loans. They declared cash dividends a couple of times to their stockholders, and they also issued shares of stock under their employee stock purchase plan. Breaking down their earnings per share, basic earnings are 5 cents a share, and diluted is just 4 cents. This accounts for any shares that could be issued, which would reduce value of each individual share. NTIC uses stock options as part of their compensation plans to the employees, and here we can see details about the number of options and their prices. As of February, they recognize stock option expense of about $603,513 on them dollars and $9, and they recognize $73,500 of FIFINers and stock-based compensation expenses. NTIC operates in two main segments, Xerox and Naturtech. Xerox's sales were $14.1 million for this most recent quarter, and $4 $9 million for Naturtech. In terms of geography, most of their sales are within the United States. Like most companies, they're involved in various claims and legal actions, but they don't expect any major issues from these. For those interested in cash flow, they paid $139,155 in interest and $368,197 in income taxes for the 3 months. The company's income tax expense was just over $275,000. They received nearly $1.1 million from the Employee Retention Credit Program from the pandemic. There was no notable news in offices adopting a Rule 10b5-1 trading arrangement. Just now, what does this all mean? NTIC is navigating some tricky waters. Sales are down, costs are up, but they're managing to stay afloat. Their dependence on joint ventures means their success is tied to those partnerships, which adds risk. One opportunity is the increased focus of governments to embrace sustainability. There is huge potential for them if their bio-based plastics take off, but competition in that market is fierce. Overall, NTIC is facing a mix of challenges and opportunities. They need to innovate and adapt to stay ahead, but they have a solid base to build upon. That's all for this episode of Corporate Decoder. If you found this breakdown helpful, remember to like, comment, and subscribe for more financial deep dives.